Beep, 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 beep. Hello, everybody. Welcome to a special Markets and Turmoil session of the OO Show.
Yeah.
Dan, Matt, how you guys doing?
Good morning. Made it through the night.
Yeah, made it through. Yeah.
I assume that you both of you as well have not slept all night and just been smoking cigs and drinking coffee, just watching.
Smoking cigs, sitting on the folding chair in the driveway, smoking.
That's right. Just smoke. That's right. That's right. Grilling some cheese sandwiches on the radiator.
Yeah.
Just waiting.
Yeah.
Well, let's get started and we'll go from there. And today, a down day, some blues music's a perfect get me go.
Yeah.
Tariffs.
45 Eastern. Option Omega's got your back. Troy's dreaming big like LeBron. Matt's backtesting like a daddy Mac. Dan's 30 years got our way. Trading life and markets every day. Rusty's chained to the mines. Digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
Guys,
Woo!
Markets and turmoil. Now, I think I asked you guys earlier this week. This will be the only showboating I do because I have a feeling you actually might still be right. So I've got to take my credit now while I can, because I think by 4 you guys actually might be more right than me. But I think we said VIX is going to be down by Friday. Do you still see that happening?
At what VIX level did we make that prediction?
I think it was like 20. Yeah,
I don't remember.
I think it was like 22, 23.
Oh, that's going to be tough. Possible, but I think it's going to be tough. We're at 27 right now. I don't know. You can argue both sides of this that it looks like we were at 200 points down when I looked last night, and let me check, we're at 200 points down, 212 points down again.
Yeah.
Do we seem to keep bouncing off this same level?
So if you look at this chart on the bottom right, this little snippet, I mean, we were at this level basically Monday morning, a few points down. And I was telling the guys, like, it's ridiculous. Shout out the media, because it's ridiculous when they're like, hey, guess what? $2 trillion wiped off the stock market. Thanks. And it's like, well, I don't care what you think about the tariff, but Monday morning we were at this level.
Right.
So
we gained $2 trillion in 3 days.
Yeah.
Yeah, I mean, gained $2 trillion.
Yeah. Dan, you've been through a lot of these. I don't even know if these is one of these. I mean, it's not impressive to me with the VIX.
Yeah, like you said, I mean, you think about it, March 13, when we open today, it'll be like a deja vu for March 13th.
Yeah.
Where kind of around this 5,500 level, and VIX is around 26, 27. So, VIX still it doesn't look like a panic, but as Matt and we were talking before the show, if we continue, if it can break through this level, which we flirted with, so quite a bit, that could pop it. But there's going to be a lot of, like Troy, you were saying, this wasn't like a classic earnings situation where the news is over whatever president was going to come out with, there was still going to be uncertainty. And now there's a whole new, all it means to me is there's, these big 100-point candles that have been going on for 6 weeks, it's going to be a continuation. The show's going on, right? Whereas if real clarity came out, I think, you could have got VIX under 20 and, a little more sanity, but, again, and I think this crazy, VIX 100-point moves, which a lot of people like. And for people who do 0-day iron condors, you're going to get your high vol, but it's very perilous right now. So I mean, there's going to be wouldn't you agree? I mean, just with this news out, it's another 2, 3, 4 days. The country's going to go back and forth, but it is positive the news has come out, right? And I think that's why VIX isn't exploding at this point. So.
Yeah, I'm still a little surprised that they're not pricing in more vol at this point, because it just was worse than expected. I think that's why vol's up at all. I mean, vol would be crushed, to your point, if it was. But I just don't know if they're thinking through the ramifications of everything, or maybe it's a 10% drawdown, and that's what the market's like. The ramifications are 10%. That's best case scenario if you're Trump. Is like, all right, we're good.
Troy, you and Matt were talking a little bit before about, I asked what was your biggest surprise on the news conference, and what do you think people got a little wigged out on? What were you want to repeat?
Well,
that?
I mean, I think I was listening to Bloomberg after, and that tariff on China is actually 50-something%. I mean, and you think about that, that's like one of those kind of shock and awe numbers. It's like, we have a 50% tariff, 54% tariff on China.
Yeah.
It's like, you think that's a lot of that. I think that's why Walmart dropped the most, because Walmart is basically China Mart. Like, it's just all Chinese products.
China Mart. Wow.
And so shout out Walmart, obviously.
Yeah.
But Sam Walton was a little too good in my mind at efficiency and through the years, but so I think those type of companies are going to get it the worst. And
what was China? You said it was 24%.
No, it's like 54% now.
I mean, what was it before?
24, I think. 24.
Okay, so okay.
Yeah, but I mean, yeah, everybody gets a tariff. That's the reality of yesterday's. Everybody gets a tariff, and we'll see how it plays out. I mean, we'll see how it plays out, but I think today is going to be wild, either direction. I mean, and we see what's funny is we've seen people. It is funny to me, Dan, like people saying, these kids have never seen a situation where you don't have to buy the dip.
Yeah.
You just buy the dip.
Yeah.
And there's two arguments to that. One, I think that's true. Like, we always rally.
Yeah.
Now 2022, it took a couple months, but we always rally.
Until we don't. We always rally until we don't.
Bill, can you think of, was 2008 the last time it we're just not going up for a couple years?
Yeah. 2008. I'm sure there were others. I mean, the one that stands out in my mind, but I mean, the market was a lot lower. It was 1987, the stock market crash.
Yeah.
Were either of you born in? Wait, you were. What year?
Yeah,
you guys weren't.
Yeah, wasn't trading, but
we're not. Okay. Strangely enough, I was trading.
Yeah,
but I was trading. I was trading like milk for.
I was trading baseball
candy.
cards.
I was trading baseball cards.
That's
you
right.
guys had it in you but in 87, it was, I remember I was on the trading floor at the time, and really in 1987, the train had left the station in end of August, beginning of September. You started to get, because there was this euphoric market was going up for a while, and then the crash, the 87 crash took place in October. But for a month before that, the market was starting to go down. And just to get you, it's always people are geniuses before something. In other words, I remember before, a lot of the brokerage firms that would back traders. One of them was First Options of Chicago. It's just, it's a think or swim or one of these tasty trade for market makers. Well, they used to let you just, selling puts, and these guys were making all this money because, selling puts at 30 cents, 40 cents, a couple thousand of them or whatever. And they're just saying, these guys are smart, so the risk department wasn't, it's not, the risk departments aren't like they are now. So there were people who were selling 5, 6, 7,000 puts every month,
Wow.
For 40 cents, 50 cents. And they, but in the business to the clearing firms, well, they were geniuses. They must know what they're doing, right?
Yeah.
Because they're, because, and I think a lot of it, they were doing it because they let them, it was like, oh, your margin's okay, let it go. And then once the market crashed, all these, it was really, I remember like First Options, it was only like 3, 4 guys that almost took them under, or it was just 3, 4 guys, but can we take 3, 4 guys and they're each selling 4,000 or 5,000 naked puts, and that happens. And it's not even, and that's the thing we're talking about a little bit here, volatility. Back in 87, we're talking if there was a VIX at the time, I don't even know if they traded SPX in 1980s. So OEX was the precursor to it, but volatility, I remember this. Volatility went to over 200. And so some of these gentlemen who are short puts at, let's say, 15 volatility or whatever, they're like, no. So the clearing firm says, you know what? You're no longer geniuses. You've lost all your money plus a good part of ours. We're going to go in and close your positions at the opening at a 210 volatility. And so they went into the OEX pit, I remember at the time, and they were like, I got to buy this straddle at the money, 215 volatility, we'll buy 10,000 of them. And people almost tackled them because it was like, I'll sell it. I'll sell some at 220 volatility or I mean, it wasn't that aggressive to sell it because, there's this panic, like what's going on here? Is the world going to end? So from that day, they changed the risk management a little bit, so you can't just sell 1 million puts and retire. And so it's definitely nowadays they seem, pretty aggressive, the risk management, in a lot of the risk management departments, like at Tasty Trade, Peter Klink, he runs the all that stuff, the margin and everything. But he was in the 87. So these guys remember very clearly what was going on. So that's why risk departments have a lot of the older guys, because it's like, this can happen. So whereas you're right, the danger here is, and I'm not saying, this is similar, but you're right. Sometimes people are like, we'll just buy the dips, and then, that could be a major problem. So, it's
crazy.
Could be a little bit different. We really haven't had this type of thing, right? And at least since I started in maybe 1982, and I haven't seen any tariffs. Have you, Matt or Troy, seen any? There hasn't been any tariffs, really.
I mean, his first term, but I think those were baby tariffs.
They were, and that was. But the flip side of that is like, this is like the movie that they've talked about for 10 years. I mean, it's 2025. Literally, Trump was talking about tariffs in 2015. So it's like,
I mean, to that point, two more questions, and we'll move on. I mean, to me, this is more of a comment than a question. I don't understand. I mean, again, listen, I've been there. I do stupid things all the time, every day. I do not understand someone who's surprised by this move, wakes up surprised by this move, who had a position on that is surprised by this move. No judgment. We've all done it. I'm literally just saying I don't understand. Like this was the most telegraphed thing. We had a date a month ahead of time for the reason to answer the reason we have been down for a month. And so you knew, okay, market's down 10%. We're either going to shoot up almost immediately if he resolves this, or we're going to break down to the downside. Like there wasn't a lot of surprise.
Yeah, it wasn't Right. You knew the event, right? So you knew if you were going to have a trade on, it's like you knew you were, you're a pilot. You knew you were driving into a thunderstorm, right?
Yeah.
You knew it. You consciously did it for some reason, or whatever. But I think, that's a big.
It's opening Christmas gifts, like Christmas morning. I can understand you being surprised at what you find in the box.
Yeah.
But the idea that there was a box with something inside of it should have been like prepare your hearts a little bit, prepare your hearts. Anyway,
the question is how you play, it's just.
Well, that's my question, Dan. That's my question. So we can pontificize. It's not a word, but we can do that. We could do that. But Dan, how do you get out of this mess? I mean, what are some, we obviously shout out Option Omega, shout out automated trading, but on a day like today where there's a lot, the closest you can get to arbitrage opportunities are yesterday and today. Like if you like arbitrage, I'll just give you an example real quick of just what I mean by arbitrage, not in the classical sense. Like we were up 90, I think at some point at 405, 410.
Yeah.
If you buy a $5 put in ES future options, 5 minutes later you had quadrupled your money. Like that's what I mean by discretionary, taking shots if you want to take shots.
Yeah.
So what do you do on a day like today?
For small size,
small size, obviously, like options involve risks.
Yeah. So really you're talking strategies more speculative, either taking a direction or doing something like a reverse iron condor or a that type of trade. The big thing first is, you probably want to have the things I would be careful with is buying a call or buying a put, because the volatility is pretty high.
For
sure.
So
you can do a wide call debit spread. A call or put is one way to do it. If you do think the vol's a bit high and you want to sell puts, grab a put against it, right? Grab a put again. Yes, you are, getting a lot of room on a put credit spread, but grab a put. Market makers generally, because, just like they basically had portfolio margins. Two of the big trades in volatile environments were when volatility was low, they'd be like ratio backspreads, anything where you're net long puts or net long calls, and specifically for the downside, net long puts. And where you really benefit, you didn't benefit as much with, you could benefit a lot. You benefit not only with the, and we're talking generally delta neutral trades. You can put a ratio backspread on, buy two, so on. So it doesn't matter which way, but if we go down and you bought two puts and sold one put, you're making money on price movement, but volatility is the real big thing. And then the other thing, reverse iron condors, reverse calendars were big. Now, again, some of these but again, ratio backspreads and reverse calendars. Reverse calendars would be a speculative strategy in a high vol environment. The problem is in retail accounts, unless you have portfolio margin.
You're not doing it in SPX.
Well, no, the brokerage firms kill you. But if you do ratio backspreads in SPX and reverse calendars in a portfolio margin account, you'd be amazed how little they charge you, because the portfolio margin accounts, they'll say up or down 12%. This guy's not losing money. We got to charge him something. Right. And they charge you the minimum. And so that's why, like you said, E-minis is a great thing to do, right? Or some of those, because you don't have to put up a couple $100,000 for portfolio margin, right? What's the
I don't know what the margin is, honestly, on that, but I know it's a lot less. You can trade you can trade them overnight, which was beneficial last night, for instance.
I think that's one. Michelle was saying something about circuit breakers. Yeah, the biggest problem today is, execution. 0 day, it should be pretty liquid. I would, to a degree, unless we really start gapping circuit breakers. right now is with us near 5,500 and stuff. Wouldn't you guys agree? I don't think it'd be a big panicky situation. It's like I'm more concerned when we break one way or the other.
Yeah,
right.
Breaking up, I don't think is going to be a problem. I don't think a problem. If we start breaking down, execution is going to be tough. Circuit breakers. I forget the rules on the circuit breakers.
You get 7% for the first one during RTH. So extended trading hours have circuit breakers with a lower threshold, but I believe 7% is the first one during the regular trading hours. I can to make it.
Yeah. 7, 13, and 20% is a level 3. I think level 3s they just close it for the day.
Yeah, and I think at COVID we never hit a level 3, right? I'm going back on memory.
Well, level 3 is a 20% decline.
Yeah,
like we didn't go. That's the 87 crash.
Right. I think we
hit level 1. We hit level 1 a couple times.
3 times, maybe 3 times.
Yeah.
I don't know that we ever hit a level 2, even though now that I'm thinking about it, I can't remember.
Michelle, I'll say this. I mean, again, this is not financial advice. This is weirdly, we're all in a weird situation. Weirdly for entertainment purposes. But I will say I do, and Dane, you please correct me if I'm wrong, because you know this a lot better than I do, 1,000 times better than I do. I have lost a lot of money on these type of days when I have a put spread on or something like that, and you open really underneath it.
Yeah.
Of trying to insta fill at 9:30 and just absolutely getting wrecked. With
the execution, you mean?
On the execution.
Oh yeah.
I think there's some wisdom in saying you might want to just sit it out for the first 5 to 10 minutes, because I think the bid ask is going to be super wide at first.
Absolutely, and remember, like when you're in the pits, I'm sure they have something like this now. When the market gets crazy like this, they give you they'll call it relief. I don't know what the words they use these days, where if you're a market maker, you can make your markets wider than normal. So if you make your markets wider than normal, that makes execution a little tougher. And sometimes the traders will back off, maybe do a little bit less size. So, I agree with you. The real issue today is liquidity, and that people don't. Yeah, because, you look yesterday, I was going a couple spreads and you go at one contract for price discovery, right?
Yeah.
And it was like, I overpaid by 30 cents and I watched it a little bit, right? And then I went back and got it at a better price. But it's, getting, these are days where you could pay $1 more for something because you're like, okay, I'm watching, there is no mid price. So you're watching the mid range and it's all over the map. At least I would recommend, if you're doing a debit transaction, watch the bid ask, but start really low, much lower than you would, because, you don't want it to be taken, start low on a debit, start high on a credit, and slowly come up until, because they have fair value for when they're going to execute something. But take your time. I agree with you. I would, if you can, stay away from the first half hour, let things stabilize. But again, you don't know somebody's position if they're in a lot.
That's right. Yeah, if you're 3,000 positive deltas this morning, I get
it. You gotta nip away at it, right?
Yeah, that's right.
I mean, a lot of times, if you're long delta, students will say, I'm at a max loss, or I've lost probably more than I want to lose, and you're at the opening. Sometimes I'll just kind of take a breath, maybe walk around the block, and just say, okay, how much more do I, and it's a horrible thing to say, but how much more do I have to lose, right? If you've lost 80% or 90% of what you're going to lose, what the,
it's true. If you're opening near a max loss, and to the point, I mean, Matt deals with this all the time. People asking, hey, do you have the data for 9:30? And we say, we do have the data for 9:30. It's not trustworthy data.
Right.
Like I wouldn't trust 931's data today to save my life. Like, because, and to the last thing I'll say about the liquidity, like I have lost a lot of money being a dummy trying to, when I was pretty new to options, saying the one thing I've always had is I'm long gamma. and you can imagine how that's gone in a straight up market since 2018. I have some fun during days like this, but largely it's not fun. But trying to get in 2018, 2019, like Volmageddon, and saying, hey, tomorrow morning, 9:30, I'm opening a long straddle because I think we're going to crash, just being really new to options. And I'm going to set it as a market order, right? And then getting a little smarter and saying, I'm going to set it as a limit order, but whatever the limit is, I'll just hit buy, put, buy, call, review, and send. Instant filled. And you never even get close to the price that you got filled at the rest of the day. It's just an automatic 15%, 20% loser.
Oh yeah.
That's what happens on days like today. So just be careful.
And the biggest thing is if you're newer to options and more, if you don't have enough trades under your belt where you at least have an idea what execution is, how the whole thing of execution is when things are going crazy, don't play. I mean, sometimes people think that like on days like this, they're giving away money, right? They're giving away, like when it swings 100 points, like somehow you have to be involved, right?
I feel exposed when you tell me that. I feel
well, we've all been there. I mean, it's have a plan and but I just because the potential of obviously it's more predictable if we stay above 5,500. If we rally up, the VIX will probably come down a bit, and it'll execution will be fine. But if we blow through that 5,500 on the downside, which we haven't in it, how many times, Matt, have we kind of hit that 3?
I don't know. Like you said, we were pretty close to this level on Monday, right?
Monday, March 15th too, and
so, there's two types of traders I found. I mean, there's 5,000 types of traders, but there's the vast majority of traders don't want to play on days like today, days like yesterday, even. And those people have a lot more money than me. And then there's the type of traders who are like me that, like, my wife was laughing at me last night because, like, I'm in the zone. This is Top Gun, baby. Like I'm in the plane. I'm locked in. I get so jacked.
You live for the crisis,
dude. COVID. I was just sitting there.
Well, and I think different people are different. Maybe they're comfortable with different trades, and for some people, you're right. This is like the Super Bowl because they like that. Now, Troy, during these high volatility markets, do you like to wear certain clothing? I mean, when you're going into battle here, like Top Gun, do you put on like a special?
It's the same thing every time. You get into my office completely naked. Just trading only a VIX over 25. We just get completely naked. So
that might be more information than I.
That's right. On that note, okay. So let's go through a trade real quick. To be honest, markets in turmoil day. Yeah. If CNBC and Bloomberg gets to talk about markets in turmoil, we get to as well.
That's right.
We've been improving on something we call the McRib, and this was yesterday's McRib.
Ooh, it's green.
It's green now.
It's green.
We got really good yesterday. And we're going to do one thing to it. So you see right now, what we added was we greatly filter out trades by saying we only want moves when VIX is down.
Crushing a little bit going.
Yeah, crushing a little bit. I mean, crushing if it's down at all.
Yeah, right.
But yeah, point taken. We're going to do one other thing today. And if you were part of the butterfly, last week where you sold and you weren't long, you're short the butterfly, you'll recognize some of these patterns that we're applying. But this is today's butterfly. And this is big because we've got it up to a 3.1 MAR, which,
on 5% allocation.
On a 5% allocation.
With 3 years, yeah.
Yeah, so that feels pretty good. I'm gonna put this in the chat.
Yes.
But this is what we've done. We took out Mondays and we took out Fridays. So we've limited it to days where the market seems to move more. People don't believe that. I'm going to be really honest with you. There's days I don't believe that. still, this idea that there's seasonality to days through time in the market. Matt, I know you trade a lot more like this than I do. You have found it to be true, haven't you?
Well, I do a lot less than I used to. And a lot of what I trade are DTE setups that only set up on certain days. So that's not really, I don't know if you want to say if that's seasonality or not. That's kind of a whole separate discussion. On a zero DTE like this, for me, the biggest outlier day is Thursday. And that Thursdays, now we haven't had options for as long on Thursdays as we have for Monday, Wednesday, Friday. But in the almost 3 years that we've had Thursday options, there are a high number of Thursday days that just get after it. They really move. And so typically for me, again, not financial advice, but my credit selling is a lot less on Thursdays. And trades like this that are long movement, long vol trades often are almost always on Thursdays. So to me, that's the biggest outlier, Thursday. But there is statistical stuff for Fridays that's gone back a long time. And the Friday to Monday discussion is a whole nother discussion. So yeah, I think the cool thing about OO is, it's literally trivial to backtest, and you can look at the number of days that you're testing and how a certain backtest does or doesn't do on certain days of the week.
Yeah. And Dan, I remember learning from you years and years ago, and you almost had, you weren't backtesting because we didn't, there wasn't 1 minute data. So like going back to that, but you almost had an intuition about you, because you'd say things like, Tuesdays are double calendars days. And you kind of put it out there, like, we're going to do a Tuesday double calendar, and there's almost just a rhythm to it.
There is, but a couple comments. One, I didn't know that, until I saw the data, this Tuesday, Wednesday, Thursday, that's what we didn't have. We could have, we remember we have intuition, but as we get older, we forget, we forget, like, what was that bad day? What was that good day? But I think this is very helpful information. The one thing is, what's interesting is, like Matt said, this is more, look at what it changed with this test. All Troy did was say, we're going to play every Tuesday, Wednesday, Thursday for shorter term options. And look at the change. So I think that's crucial. I wasn't aware of this precision in any way. But the other thing is, we have to remember duration, right? If you say to me, how about doing a 15-day or 21-day calendar or something like that? Well, it doesn't bother me, because your gamma is going to be a lot less lower. Your deltas aren't going to move as much if it goes against you. But if you're in a 0 or 1 day or 2 day duration, this is doubly more important, right? Because gamma on those small trades, when it moves against you, your curve is, you're going to get nailed. But if you're, the only like range bound type trades that we found very small this week was just like, 30-day iron condor or something out there where the gamma is literally almost zero. So even on a 3% move, your deltas, you don't even get over 1 delta long on the downside for these things. But, you can make an argument, which I agree with. People say, you hear this a lot, I'm going to sell high volatility, right? Vol's up, sell it. Well, you're missing half that sentence, right? If it gets in the upper percentile, I'm going to sell it. To me, the second part of that sentence should be when the market starts a little two-way, like here. I wouldn't necessarily look and say, I'm going to sell some volatility today. When it looks like the world isn't going to end and we're a little stabilized, I'll do it. Like I remember in the COVID correction, VIX went from 20 to 80. If you were selling at 10-point increments all the way up, you'd have gone bankrupt 2 or 3 times on the way up. So the thing is, well, when in a situation like COVID would you start doing iron condors or sell puts or something like that. To me, it's got to be, we were more comfortable doing it when VIX was 50, when the market looked like it was much more stabilizing, 800 points in 5 weeks. So I think on today, it's be patient. It's not going to, be patient with selling stuff, but wait, for range bound, iron condors, calendars, even double calendar, that type of stuff. Let there be a little bit of stability, right? So I think, I love this. I mean, this has been new information I've learned so much with the, this Tuesday, Wednesday, Thursday thing, and especially for shorter term options. So I think that's great information you can apply to longer durations too. I mean, I've already tweaked quite a few things because of the back testing and help from you guys, because it's more precision. It's Moneyball, right?
It's Moneyball. I love it. I love it.
You got the data.
The trade gets on base. That's what this trade does. The trade
we
gets on
we
base.
don't care about what the trade's girlfriend looks like.
That's
we're
right.
not worried about the hitch in his swing. He gets on base. Do we care if it's a Walker base hit?
That's right.
We do not.
No, we do not. No, we don't. Great movie. Shout out, great movie.
Great movie.
Speaking of great movies, we've got 10 minutes to get to our battle stations.
That's right.
So, tomorrow we're going to improve on this test again, which I'm excited about.
Friday.
Once we get past 3 on MAR like this with 5% allocation, I get excited. So we're going to do one thing, and I'll give you a hint. If you look at this is still set it and forget it. Tomorrow we're not going to set it and forget it.
Interesting.
We're going to do some stuff to it. So guys, listen, be careful out there today. I know everybody says that, and I know these are, if you listen to any kind of financial thing, it's like stay safe out there. But to be very specific, like stay calm, because when you get emotional, you make really bad decisions financially. So try to stay calm, especially the first 10 minutes. Then you can freak out a little bit. So
that's right.
All right, guys, have a great day, and we will talk to you tomorrow.
Thanks.
See you. Bye.